One. Microsoft up $20, $21. Boeing up 7.5 bucks. You have Nvidia and Amazon trading in the green. We're probably up 20 or 30 handles. No, we're up only five. We got a lot of earnings reports. We got to talk about Microsoft, Activision. Tesla gets a downgrade, but going up on the downgrade. What's going on with FRC and these regional banks? We got a lot to figure out today on pre-market prep. With no further ado, let's get things going, Aaron.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors around the world. Welcome. We're up 4.5 handles at 97.75. Not much of an overnight rally. Pre-market high 16.25. That's what the bulls. We got to get it above 16.25, or else this market has a lot more downside to it. Pre-market low 89.25, just a few ticks below that low from yesterday. The buck under pressure down 51 cents at 101.08. Bonds giving back a little bit from yesterday's rally. They're down 13.30 at 131 and 31.30. Boy, that's a mouthful. Crude creeping back towards that gap fill. Oh boy, look at that support. That better hold in crude. Down 14 cents at 76.93. Gold back above back above 2,000, up a buck at 2,005.5. Silver rebounding from yesterday's thrashing, still an inside day, up 41 cents at 25,295. And a good call by Triple D yesterday with the bank contagion. Bitcoin catching a bid, up 1385 at 28,990. So I make a title for the show, and I throw it at Dennis, and I say, Dennis, the market neutral trader, can Microsoft save the day?
Yeah, the answer is no. Microsoft, it's already been spoken here. You got two stories here today. Two stories that matter. Microsoft killing it, or like at least in the conference call because they're talking AI. Earnings were very good. And then the other story is FRC, falling 50% yesterday. It's down another 17% here this morning, or 15% here now. It's really been chopping around. People are concerned about this being the next signature bank or Silicon Valley Bank. I think they have the rights to be concerned. I think the government is going to have to step in here. Just my opinion. I know nothing, but I think that we definitely have a situation where this could be a zero. That will, one, spook investors, but two, spook depositors. So you've got to worry about the contagion effect here. KRE made a new 52-week low yesterday. That's not what you want to see if you're in this bull market that everybody keeps telling me we're in. So KRE breaking down new lows, not good news. S&P giving all the Microsoft gains back, not good news. Microsoft, great news. FRC, not so great news.
All right, let's go right to the Microsoft. They had a Q3 beat, big beat, 245 versus 223. Beat on the sales, 52.9 billion versus the 51.02 billion estimate. They were talking AI. I saw a quote from Gene Munster, and he said during the conference call comparing Google and Microsoft, when Google was talking about AI, it was like they were sipping iced tea. And when Microsoft was talking about it, it was like they were drinking Red Bull.
Yeah.
Street running with this. Let's go to the Microsoft price action. Street absolutely getting destroyed, going the wrong way into the report. This might be one of the biggest moves I've ever seen in Microsoft, up 21, almost 22 bucks. That's almost 8%. I mean, I'm not gonna make a wager on this, but if they get this and they take out the pre-market high on this one at 302 even, oh man, I don't know. I mean, there's no monthly resistance until 315.11. But man, if you took a shot on any kind of calls or anything or whatever, if you've been looking for a bailout over 290, holy mackerel! I had absolutely no idea where to buy this thing, and if I had to
Well, I'm
like,
not buying. I'm not paying
yeah, no
31
way.
times earnings for Microsoft. And yes, they're very excited about AI. This is the main reason. The stock was trading 287 and they started on the conference call and the stock just going up, up, up because like as Gene Munster was saying, they, are just talking about so many possibilities with AI. I do believe Google is going to be a major AI player too, but Google was very conservative. So Microsoft very aggressive on their call talking about AI, Google very conservative to Gene Munster's point. So this is why Google has reversed since it was trading up. They were both trading up after hours, but we know this AI story has been a driver for price for Microsoft and a driver for price for Google. So as soon as the conference call started, and hey, look at all everything good Microsoft saying. What are you saying, Google? You're not saying anything. They start selling it. So that's why you've seen the separation since both popped up on their earnings report. One talked very bullish and one was very conservative. Not talking, that they weren't talking about AI, but very conservative with their talking about it. So that's the separation. Right now, everybody's rah rah. Microsoft's going to take over the world. We're all going to bing everything, and ChatGPT is going to take all our jobs. That is what everybody is thinking when they're buying Microsoft. Maybe that is true. I'm not with that camp.
Okay, before we go to the Google numbers here, there's additional news with Microsoft, and when you're these arbs, they got to just be playing this for what it is about this deal, right? Now the UK is saying, "Well, we're going to review this. We don't like the competition and negative ruling." Boom, down $9.39. A lot of the gains being wiped out from when we thought the deal was on. Once again, it's just a arbitrageurs fest here. Can't really talk about it technically. You're falling right back into this area where it was before 78 to 80. Just tough. I mean, if you still think the deal's going through, you're getting here a nice discount. But boy, oh boy, who knows? I mean, Microsoft says they're going ahead. They want to close this out by the end of the year. But man, oh man, back and forth, back and forth. Have you been trying to play this arb, Dennis, or is this a little bit?
I tried to buy it here this morning, actually. It's pulled back. It got down to 76. I actually almost caught the bottom. But again, it was so choppy and spooked. And then you're getting ready for the show. And I was like, you know what? This is so much babysitting involved in this. And one thing you have to consider is if you're trading one stock and you're not doing a radio show and you're not doing anything else, you can sit there and just stare at the screen and watch it. When you're trading ATVI, especially on those numbers, you can't always, I have a pile of other positions from overnight positions. Sometimes the opportunity cost is greater than sitting there and staring at that stock. When you're trading a leader, you have to stare at the screen. I can tape read and I can probably make money trading the leaders just by staring at that one, but my opportunity cost is too high because when I'm trading just that, I can't trade anything else. So I need stocks that are moving slower to be able to manage them. I can't manage 200 ATVIs or, not even 200, but say, I've had 50 overnight
100,
positions.
yeah,
Yeah,
50 or
I can't
100.
manage 50 ATVIs. I can't manage one ATVI and manage 49 other positions. So just too busy. Should have held on though, because I bought in the lower 76s. Should have held on because now it's in the mid 77s. I do think that this deal is not dead. I do think Microsoft will appeal it. I think they'll have commentary later today if they haven't had commentary already. So I do think this could actually be a buy the dip opportunity here. I said that, before as well, but we're down, $9-10 here. Risk arbs are saying, they're selling first and asking questions later. I think in the 76 to 77 area, this isn't a bad risk reward. One, EA has come back substantially from its lows. Take Two has come back substantially from its lows. Activision Blizzard, even by itself, probably if the deal was dead, would only be about 71 or 72. So I see about $6 to $7 downside at this point in time. And I see the $18 upside. So I think at 77, I think it actually sets up well for a buy the dip opportunity here.
And also,
Just
if
my
you,
opinion.
yeah, just looking at like the dailies here, I know it's very tough to, talk about this technically when there's so much news around it. But, when you had some scares before in February, where'd it go? It went under 72, right? Then it crept its way back. Now there's more scares and it's coming in at 77, 76, 77. So you can see, the arbs that were, fading it, they're stepping up their bids. heads to a little bit higher, a little bit higher area. But I'm sure Microsoft will have something to say about that today. Let's go to the Googster, trading down 41 cents here. Not a bad report. EPS 117 versus 106 estimate. Man, they make a lot of money. 69.79 billion versus the 68.09 or 68.9 estimate. Search revenue up, cloud revenue up, $70 billion buyback, Dennis. I mean, they said everything good. You get a pop. I'll just do the technicals real quick, let you give the fundamentals. Get a pop to 110.60. What do you have? Is that above the high of the move? High of the move was 109.63. You got the fade going on now. Looks like you got a mild buyer here at 103. So Google, Dennis, the pop and the drop certainly not acting like Microsoft.
No, and story trumps all here. I would not buy the dip in Google for the simple reason I still think Google's going to be a major player. We're going to call it Google forever, not Alphabet. I still think Google is going to be a major player in AI. I don't think they're as far behind Microsoft as everybody thinks, but it doesn't matter. The story right now is Google is falling behind Microsoft, and Microsoft Bing is going to start to pick up some market share on Google search. And if that's the case, this is not good news. I do think this reversal is significant. I don't like seeing a stock go from green to red, especially when they say that much good news. And again, to Gene Munster's point, they just didn't say enough aggressive commentary on AI on the conference call. Maybe they're being conservative, but it was not the time to be conservative when Microsoft was doing a call at the same time and being super ultra aggressive on their talk about AI. So this story here is cooling off right now. I don't know what's going to turn it around, but I would say I would not be a buyer of Google on the dip here. I would not be surprised if it leaks further.
Okay. All right. More earnings reports from last night, and people are not like me. They must love those CMG burritos here. Chipotle beats. Wow, big beat. 1050 versus 892 on the EPS. Beat on. Oh no, just a slight beat on the sales. 2.37 billion versus 2.34. The executives expect cost of sales to remain low in the 29% range. CMG, always a tough one. Why don't they split this thing? Up $139. Is this a new all-time high? Let me
It's
go to the.
close if it's not.
Yeah, all-time high, 1958.55. Up, if you couldn't get me to buy a stock up 139 bucks on 4,000 shares this morning, I'm not even going to touch the technicals on this one. Dennis, what do you got for me on
I suck on
CMG?
this stock, so I'm not even going to try to give an opinion. I've been bearish, not bearish, but I haven't been on this train at all for a long time. I've never got the valuation. You know me, it's just not my kind of stock. I mean, where's CMG? What's the valuation on this puppy here now? I got to go look.
Okay.
P's always been, well north of 30. Where is it now? We're going to look it up. CMG.
That's a lot of burritos.
Looking at, it's a lot of burritos. I mean, 40, we're talking 41 times earnings. About 55, on the 55 times earnings right now, 41 on the forward multiple. I've never got paying for a quick service restaurant 55 times earnings, but you know what? Everybody who has made a lot of money with it. So story remains hot. Stock's near an all-time high. I don't short stocks making new all-time highs or near them, but I'm not chasing it either. So I'm just out. No call on CMG.
All right, let's finish up the after hours earnings here with Visa. Visa just hanging out here near all time highs, which is I guess it's not all time highs. Recent high of the moves here to me, like this 235 area, it's sticking out like a sore thumb. You did get a pop in the after hours over 235. Looks like good support at 230. I'll keep an eye on this one. If the market rolls over and this takes out Street leaning the wrong way into the report, not getting much of a bounce. If this thing loses 230, I think you could be at 225 in a heartbeat. Dennis, any thoughts on the letter V?
If I was
Visa?
in it, I would sell it right now. The reason is you're getting a bounce here. The earnings were fine. This got hit on UPS yesterday, and it should have got hit on UPS yesterday. And now you're getting a bounce, so people, getting half their losses back from the hit it took on UPS. I think, I don't like what UPS said yesterday. I don't think it's good for Visa or MasterCard.
Okay.
So,
Yep.
I'm not a fan. Not at this point in time, because we've got other issues here. We're going to get to them in a second with FRC.
I just was getting a great segue there.
And we will. And I would like to do ENPH. If we're going to finish off all the earnings from last night, I would like to do ENPH right now. But Visa, I'm very opinionated on. I'd sell the bounce. Just my opinion.
And are you buying the dip here in ENPH?
No.
Enphase Energy always has really been kind of the laggard compared to the First Solar.
Lately.
Lately that's caught a downgrade to a sell. That was a sneaky Friday downgrade. They beat by 17 cents, but they missed on the revenues. Second quarter revenue a little light, so they're hitting it on the revenue numbers. This is a sleepy chart here. I'm saying you could say someone stepping up at the 182, 183 area. But then you could also say, man, no one's letting this thing go over 186, 187. What do we got on the monthlies? What was that low from last month? 180, 155. That's my 3-star on the downside. If I was holding out on a short or trying for a long, I would see if it got down to that area. If not, you're going to have to buy it in a rallying market. Dennis, any take on ENPH?
It's just out of favor. I mean, we've had this little rally here for a little bit, and I kind of liked it at the 190, 200 area. But I mean, now you get a disappointing earnings report. It's down 16%. It's making a new low on the move, or at least close to it. I mean, 180, 155 is your level. It's got to hold that. So if you're buying the dip, you don't want to see it breach that March low.
Okay, so the other story of the day and the story yesterday, boy, am I glad I wasn't a hero in this FRC. Get cut in half yesterday and down another 10% today. I mean, man, you don't want to, the path to zero can be jagged, but man, they hated that report yesterday. This is pretty interesting. You said it got down to $5.
I saw. Where did you see it go down here in the pre-market? I thought I saw
555.
555.
Yeah.
So we are significantly off the lows. That is the good news. The bad news is we are down here again, and the bad news is people are talking about this. If you go on Twitter, it's all over the place, social media. People are talking about this as the next signature bank, the next Silicon Valley bank, and they're talking about it, the government stepping in here. I'm not going to say that's not going to happen. I'm not going to say it's going to happen. Nobody has a crystal ball here, but the market sure thinks it's going to happen because stocks don't go from 120 to 7. And, deposits, the earnings report, obviously, with deposits going down 40%, we talked about it yesterday, was a serious issue. It's spooking people. If you are depositing in this bank, you've got to probably be noticing, or at least some of the depositors going to be noticing the price action of the stock and probably a little bit more nervous. So I would not be surprised if more people are taking their money out of FRC, which is a concern. And then you want to worry about the contagion effect. So, I mean, do we start to get other worries about the banks? KRE making new 52-week low. Never a good thing. KB is a little bit higher than that. I have the pair on KRE versus KB just for full disclosure. But
what's the second one you mentioned?
KRE, KBE. Those are the two. Yeah, I have the pair on right now, but I'm hedged, so I'm dollar hedged on it. I don't like that KRE is making new 52-week low. I don't like the FRC breakdown. PACW is helping today.
Yeah.
PACW was fine last night. You actually saw a lot of regional banks rallying last night on the PACW earnings, which we can go to right now because they were fine. They talked positively, saying deposits were up. I mean, from here, I'll just read to you. PacWest has told deposits increased 1.1 billion at March 31st versus the company's recent update of 27.1 billion as of March 20th. So they went up a little bit there. I think this is still just hard to come in here and buy PACW and saying, oh, yeah, they're fine. Because if you have another regional bank failure, and that's what, Signature Bank was, even though it was a government bailout, it was a failure. If you have another one happen, the third major regional bank to fail, I think you're going to see nervous investors on a lot of these other ones as well. So I do think PACW is a sell the rip opportunity. WAL had a nice rip. It's held the gains pretty well. I'd be nervous about that one as well, too. It's a very important day. 2, FRC needs to stabilize again, stop going down. And we don't want to see PACW give these gains back. So very important day for the regionals.
I mean, how much do you think, this is, there's obviously, it's just momentum too. I mean, who knows actually, the numbers FRC gave yesterday, but the shorts just just got a hold of this thing, right? And they're just not relenting, and you're getting some bounces. You can move it in the after hours,
I
right?
mean, we can blame the shorts, and I mean, the media would love to just come in and say, "Oh,
Yep.
it's the shorts. It's the shorts doing this." Now, you know what's doing it is the fact that maybe they didn't take any action here, as enough action to try to stem the tide, and maybe they're trying, and maybe they just can't do anything. But it's hard to just come in here and blame the shorts. I mean, they didn't force these banks to lend money
Money.
at sub 2% rates. I mean, this was a signature bank. People, there's a whole pocket of social media that says the signature bank failure was because of short selling. You know what? The signature bank and then the Silicon Valley Bank failure was because they're lending money too long at too low of a rate. The shorts didn't force them to do that. So I don't buy for a second that this is the shorts' fault, that this is happening. What I say is, these banks obviously are not liquid enough. They've lent too long for too little of a return. And that is why we saw Signature and Silicon Valley go down. And that may be why we see FRC go down as well.
I mean, also, lending and like, hey, yeah, I'll take a zillion stock options on your startup company, and so that's what they got in return for giving the money at the lower rates here. Just further going on with the separation here in the market, S&P's trying to creep back over 4,100 again, trying to get back mid range on the session. Google does go green. But let's just talk about some of like here's the tech today, Dennis. Amazon getting shellacked on the UPS yesterday.
Bounced right
That's
back.
that's getting a nice bounce up 291. Nvidia up $6, 609 at 268.50 after getting
That's
shellacked
AI
yesterday.
talk. NVIDIA's
Yeah,
AI talk. Microsoft talking it up, and everybody thinks about AI. So you're going to have an AI trade here today. Microsoft talking up as much as it did. You're seeing, you're going to see NVIDIA, AMD benefit from that because they're like, oh man, Microsoft's so
need the
bullish. Well, NVIDIA
chips.
is going to be a driver for that. So you've got the tale of two tapes here today. One, you've got the tech trade, which is very strong. There are some stocks like Apple, Netflix trading in the red. Tesla's just it was downgraded here today. But you've got, the other story here is value getting whacked. Value getting whacked yesterday. UPS, the whole soft
Oh,
landing narrative took a big hit yesterday with the UPS earnings. I don't think people talked enough about it. I hardly seen it mentioned on CNBC. UPS was down $19 yesterday, and we talked about it. We talked about they're talking about the growth slowing. So I mean, not the growth slowing. They're talking about, and I'll just bring it to you just so
yeah,
they're
the
talking,
volume.
yeah, the volume. Yeah, exactly. And if we go look and just read straight from it, it's concerning talk. UPS expects volume to remain under pressure given current macro conditions. They've got a really good feel on the consumer, and they're telling you the consumer is slowing down. That's a problem for a lot of companies. That's why retail got hammered yesterday. We talked about this. We talked about the potential for retail to get hammered, and it did. Kohl's was down 5% yesterday. I still own a piece of Kohl's. Terrible investment. Nordstrom down again, making almost new 52-week low on Nordstrom. Macy's, everybody's telling me how much the real estate's worth. Well, it's making a new 52-week low or near it as well. We're back to where we were trading back in July. So, I mean, or September, which was $15.10. So there's a tale of two markets here right now. One, the AI hot story that Microsoft is delivering. And then two is the banking problems and the UPS consumer slowing problems. So it's hard to just go, maybe we're going to, just be in a range here for a bit, but I just can't bring myself. This is why I still stay with so much cash in the long-term portfolio. People are like, you got to deploy it. And, and I was trying, I started to deploy a little bit. And look, you deploy a little bit of the cash and you get punished for doing it. I bought a little bit of Disney, down. I mean, it's just the environment where they're very difficult in the U.S. markets to make money on the long side unless you're in tech. Tech has been okay, not growth tech, just like mega cap tech, and everything else has lagged. So do you go overseas? Do you go to Europe? Europe's done pretty well here lately, maybe, or maybe you just sit and collect 5% until we get more clarity. I don't mind doing that either.
Okay, let's just take a look at the poster child for AI stocks, Chat or C3.ai. What a great name! But AI is a symbol that's getting a little bit of a pop here as well as we speak. It's trading up 42 cents. What I'll be looking at, if you're looking for more on the downside here or on the upside, you get to the high from yesterday, which it did just momentarily on the last 15-minute bracket. You do have a little bit of upside here. The 2-day high, I know this got downgraded at 1916, and you found a firm buyer at 1750. So I have no problem leaning on that 1750 level if, in fact, you're trying along in this one. We do have some numbers coming up at 8:30, but let's sneak in Boeing here. And let me give you the Boeing numbers. They miss. They lose more money than expected. They lost a buck 27 versus a buck 07. They beat on sales, but man, they're going to deliver a bunch of planes. So much for my theory of not people using bigger planes. Free cash flow, that's what they want to see. Guidance of 3 to 5 billion. Popping Boeing here up to the critical 210 level. Dennis, are you chasing this one? I think I know the
No,
answer.
I'm not. The earnings were fine. Boeing has turned its story around to a certain extent. It got hit, obviously last week or 2 weeks ago there when, the whole, SPR, what's it, SPR? Yeah.
Spirit
Debacle
or
there.
something,
Yeah.
yeah.
But with the part, I don't know. You come back up here to 209, 210. You're at
Yeah, man.
resistance here again. I mean, the stock is, trading with a ridiculous multiple. Yes, there may be growing those earnings back here, but I just think there's so many easier places to be than Boeing.
Okay. All right. All right. So let's look at some numbers here. I know they're not big numbers, but we do have durable good orders month over month coming out here at 8:30. Previous was down 1%. Consensus is up zero point 0.7. Forecast comes in at zero point 0.6, and then wholesale inventories. I really don't follow that one too closely, but you got a forecast here of 0.1%, pretty much. Consensus at 0.2%. I mean, I guess we'll get a little read on the consumer here, Dennis, and see where we're at with the durable good orders that's coming up here in a minute and a half, or just under that, Dennis, or 2 minutes. I don't know if you want to go wide on that one, but that's what we got. We got some 8:30 numbers. See if we could shake things up a little bit here this morning. But do we have time to sneak in one more earnings report here, or you just want to talk general market here for a minute
I
before the
mean, we didn't
report?
talk Bitcoin either.
Oh, okay.
And everybody gives me heat. I feel like I make some pretty good calls sometime here, so I will pat myself on the back here because I said yesterday I felt like Bitcoin. I tweeted it. I said it on the show. Felt like with the regional banking crisis, that Bitcoin would catch a bid. It absolutely did. It is up substantially from where it was just yesterday. Again, tech probably helped that trade to a certain extent here today, but also the regional banking weakness was predictable that people would come into Bitcoin. So Bitcoin comes back up not too far from the highs here now. Nice pop here for Bitcoin overnight. I
Yeah,
think that could
1820.
continue if the regional banking woes continue. I think Bitcoin continues to catch a bid. I said it yesterday. If the regional banks start to turn it around, maybe that changes. Now, again, you're coming back to resistance. So do you just take the quick gain? This is the market that takes the quick gain. So you're up 7% from yesterday. So yeah, I'd probably take the gain.
All right, here. So looks like we got the numbers at 30 seconds. I
Yeah,
guess
I'm going to go wide here.
yeah, you're gonna go wide here. I'm just gonna go to the Bitcoin chart real quickly and look at it, because the only thing I'm thinking in my mind here is you had a move down. These are from the futures from 31. Let's call it 27 for 29,000. What do we got going on here? Let's go back to the S&Ps here. It looks like we could be getting some light numbers. March durable good orders. We want to see some light numbers here, chopping around 4,100, waiting for the actual numbers to come out. Kind of just hanging out here too, as far as if
Not
you're a
moving
technical
much.
trader. Yeah, hanging out here at mid-range, durable good orders, breaking news, and come on, Mr. Santelli, give it to me. I can't look at all these different things. S&P still holding on to the gains. Dennis, are you seeing it? I mean, you just seeing more chop here. Not a big number. It's not like our
Not seeing any
PPI.
movement whatsoever.
No.
I'm seeing
Okay.
a nothing event here so far.
Nothing
Nothing
event.
event.
Okay. Forget the 1 minute. We know what numbers are exciting. If anything moves in the S&Ps, we will let you know. Dennis, what else? We got Tommy Lackey Jr. coming on here in
Yeah, we're gonna bring him
a
up.
few minutes, and Aaron's going to let me know when he arrives. He's got some good technicals for us to look at, a good recap of yesterday. Let's finish up with some of the earnings from this morning, Dennis. Are there any other earnings from this morning that are catching your eye, or do you want to talk about the ones that are coming after the bell?
Big ones after the bell here, and I think obviously I'll just give you the highlights here. Meta, probably the biggest one after the bell. You're gonna hear from Roku, which is interested with streaming. You're gonna hear one that I've got highlighted is PXD as well. The reason I have this one highlighted is because I still think there's a potential buyer for PXD. It was rumored before that could be ExxonMobil. We don't know if there's anything to it, but if you get a dip in PXD on the earnings, I'm not saying you're going to. I'm saying if you do, I will be probably buying that dip, and I may actually go in here to buy that dip. So it's got the nice dividend, but again, that dividend we know is variable, so it moves around with profits. I would love to get this thing back down to 210. I don't know if you're going to get there. Maybe the earnings blow it away and it goes the other way. I'm hoping it gets a dip so I can get long PXD.
Okay, let's yep. You know what they said? ExxonMobil said they're in talks, right? They didn't totally deny it, so you didn't get the whoosh back down to the area of where where it started from. You always like to see that on the rumors. Let's just do a real quick technical on Meta here, getting a nice bounce from yesterday. Meta sneaks back into the top components in the S&P.
Wow.
Yeah, once again, yeah.
Back.
Yeah, knocking out JP Morgan. And someone made this comment here in the chat, and I don't know. I'll have to take a look in a little bit. Could this move today push Microsoft above Apple as the top component in the S&P?
I think that could happen. How far are we away?
All right, let me pull up what I use for that. And
Microsoft is just so in favor right now, and it's hard. Like, just as much as I don't want to pay 31 times earnings, I respect it. I mean, I respect the story, and story is hot. And what I've always said on this show for the last 9 years, we've been doing this show with Benzinga, is when the story is hot, valuation doesn't matter at all. AI story is completely hot with Microsoft here right now. So the word 31 times doesn't matter at all. Story cools off, AI story cools off, then the valuation will matter. But right now, that story is hot, and it might get hotter. They continue to talk about it. So I do think Microsoft could take out Apple as the most valuable company.
It's got some work to do. As of yesterday's close, the portfolio weight in the S&P 500 of Apple was 7.14%. And it was 6.25% for Microsoft. Now, there will be a little dent put in that today if all things hold equal here. But what could put what could be the final driver is if you get a miss or a warning out of Apple, and then that tanks and Microsoft holds on to these gains. But by far, the two down right there is almost 14% of your S&P, and then you get the combined Googles in there sneaking ahead just of Amazon. But just to give you an idea of the bearing of these two stocks on the index, the next component, Amazon, well, combining the two Googles, it's around 4%, and then Amazon is 2.68%. So speaking of a long-time guest on the show, it's Tommy Lackey Jr., and he's the founder of Relativity Capital Advisors. We got Aaron in the background to roll the intro for Tommy. All right. Good morning, Mr. Lackey. How you doing there? You're in the Carolinas, right? Are you guys starting to get some nice weather there? Or are you in Georgia?
No, I'm middle Georgia.
Okay.
So I'm down in middle Georgia. We've had good heat for a while, which I love. Anything under 60, I'm not good for because I'm pretty much a motorcycle, boat, and convertible person. So
really,
that goes well with winter.
I can remember driving through Atlanta when I was a little kid. My dad was driving the car, and they had like a little bit of snow. And Atlanta is the craziest city to drive through normally. And it was the easiest drive through Atlanta my dad had ever had, because we're up in Canada, so we're used to driving in snow, and there was no cars on the road. They're like, no snowstorms. So I mean, in
The only
Georgia there.
The only cars on the road when I was a kid in Atlanta was basically us pulling a sled behind us. Probably not the best of ideas, but it was a lot of fun.
Boy, oh boy, oh
That
boy.
sounds like a
Oh
lot of
man,
fun.
oh man.
Tommy
Yeah.
Lackey, you have made this call on this show that you thought the second half would be worse than the first half. And so far, so good, because the first half of 2023 has been really good for investors. I mean, the S&P is up. You're seeing a lot of individual tech stocks rally. There's been some problems, but overall, the market is doing pretty well in the first half of 2023. Are you still holding to it that you think the second half is going to be a struggle, or have you changed your thesis?
Well, I hate holding anything because who knows what's going to come up. But yeah, I'm of the opinion that I don't think the Fed is going to budge a whole lot, like a lot of people are expecting. And again, I believe that gets more, the higher interest rates get more and more difficult for the middle class and the lower end, the longer they last. Sure, your super wealthy will stay there, but the mid and the lower end, and maybe that's what the expectations are. And some of these retail names I were talking about earlier and things like that, is that it can be a tougher area from here. Now, again, I also said last time that I thought we could make it up to around the 4,300 area or so. Not to pin myself to that, I still think that's very possible with what we have going on. But I think once you have to go over that, you really have to have a good reason. Not a narrative, which unfortunately we get every day, but you really have to see some things building on the breadth side of the market, the participation, things like that in the data, which is just not there right this second, which is why I think we're having a hard time breaking through that 4,200 level.
All right, Tommy. After a big day in the markets, you have a trading range, right? A 7-day trading range, and then you get a move out of that trading range. So if you're a fan of the 2-day move, then this should be a down day. Then you get Microsoft just throwing a curveball at the market with just a blockbuster earnings report. Hard for the index to go down when you got Microsoft up 8%, all the other tech up, anywhere from 0.5% to 2.5%. What are you coming off that rough day yesterday? Coming off the option expiration, what matters to you? What are you looking for? What are your drivers today to say, okay, that was just another, buy the dip. We're going to break out of 4,200 and go to 4,300.
Well, I think a lot of it is whether we can hold it or not. And again, we don't have to hold it all, but if we can hold some of these gains through today and chip back away at yesterday's down, then that means we have no follow through. And again, you talk about the 2-day move. Luckily, I was never skilled or schooled on the 2-day move, because I would probably be looking for the same thing. I'm looking for whether we get follow through on yesterday's big move. And if you note, I sent you some information this morning. I'm not going to worry about sharing my screen right now because it's a mess.
Okay, we got it. We got it. We'll get to it in a second here.
The chart this morning based on the short-term breadth outlook.
Okay.
They gave all the sectors and subsectors there. And if you notice, we're getting pretty oversold. And as Dennis said, we've had a pretty good year so far, and we are still overall in an uptrend since the year started. Now, you may not be in an uptrend when it comes to Russell 2000 and small caps, which is an issue. But at the same time, overall, we're in an uptrend, and all these are getting pretty red, pink and red here. So in an uptrend, this is about, these areas are where we would expect them to come down to. Maybe on these 20 moving averages, we could move on down to the 20% range in some of these. But we're not expecting them to get to 0 to 5% if we're still in an overall uptrend. That's more downtrend area. So we can go further, but this is an area that could show some support after some good sideways digestion. Again, that goes back to where are we really? Are we still in a major downtrend, which is kind of what the Russell looks more like? Mm-hmm. Or are we working on an uptrend coming back at this point? And if we are, then the Russell basically needs to hold on over about that 167 to 170 level for us to have any possibility. So that's kind of where the large caps, and it has been very narrow. I'm not going to say it hasn't with a lot of the large tech and mega tech, but when I look on my power investing site under the macro page, I look at a relative strength ranking list that I have called size and style, which basically gives growth versus value of all the different levels, mega cap down to micro cap. And in doing that, by separating those, you can clearly see that growth is still leading, but size is more important. It goes mega cap growth, value, large growth, value, mid cap growth, small cap value, mid cap value. So it's literally size is the most important thing right now, but growth still has an edge over when you look at all of the stocks out there. Now, when you flip over and look at the sectors that are leading right now over the last 2-3 weeks, that's going to be utilities, that's going to be consumer staples, that's going to be healthcare. In that scenario, that's a very defensive nature seeing that happen. But again, we would expect that during a consolidation or a digestion after growth has led for a while. Again, our question from here is can we get follow through? And during that follow through, can those defensives hold up? That's the only time whether we know whether they're real leaders or not.
I mean, we really have the tale of two markets here since the beginning of the year. The IWM up basically nothing since the beginning of the year, if not slightly down, actually. And then you have the Qs, the tech, which is up substantially. So you've had tech, driving the bus here. What's it going to take for, this convergence that we've seen between the Qs and the IWM, where you've got the IWM kind of going nowhere or slightly down, the Qs is ripping higher? What's it going to take for that to, come back together? What's it going to take for this full market, to start going up? Because right now we feel like I've got a bear market in the IWM almost, and we got a bull market in the Qs. What's it going to take for us to just go full bullish?
Well, that's the other side is that you're right. You're saying, what's it going to take for us to go up? Well, IWM has to resolve its issues. And its two main issues right now are small cap energy, which I believe do have some mispricing in them because I believe people are expecting a major recession. So energy is going to take a major hit. And I don't see that even if we go into any recession. And also with China opening back up, their energy consumption is huge. So I think energy is kind of mispriced based on the fear of our recession versus based on the world view of it. And then the flip side is financials. That's the other anchor in small caps. And again, what resolution we get here? Y'all were talking about the banking and that being the next shoe to drop. Dennis, I'll have to disagree with you a little bit. Sure. I believe in this particular scenario, the Fed and the Treasury know they've caused a ton of this, and they are why this is happening in a lot of levels, which I don't have time to go into fully here, but I'd be happy to sometime.
Yeah.
But from that stance, I think they do have to step in if another one happens and step in heavy. And I think that's when you could potentially get your floor, or we break right through it and they do nothing.
I think I agree with you, Tommy, and we can go into that a little bit if you want, but I think I agree with you. The difference between this, we look at the regional banks and you're like, are the banks going to another financial crisis? I think the big reason is the banks didn't cause the financial crisis in 2007, 2008, or the Fed didn't cause the financial crisis in 2007, 2008. The banks did. The financial crisis, the little regional financial crisis is being caused by the Fed in this case. And it was obviously, the rate rises too quickly for the regional banks to handle it. They had too much money lent out too long. And obviously at lower rates.
They were forced to do that based on the Fed paying them to do things and all of that. So they were forced in there, as well as I said last time, and we've talked about the last few times I've been on, one of the things we've realized since 2019 in these markets and through COVID and all that is velocity kills. And that's really where the problem came in through COVID, velocity in both directions. That's where we have the problem with these interest rate rises. The Fed is basically has one tool, it's a hammer, and all they can see is a nail. And so basically they're using that one tool to continue to try to pressure things. And again, I hope we look back 50 years from now and realize how stupid it is to try to increase employment to get us out of inflation. How about getting the government to stop spending like freaking fools?
Yeah.
And that causes more inflation than any worker I've ever seen in my life. And so it's a problem from the government down here. This is not an individual or an economic consumer causing this. And they know it. They just have nowhere to go because the charlatans and grifters we have in office have no intentions of changing on either side.
Tommy, let's go to your second slide here, the sector and subsector short-term breadth. We don't talk a ton about breadth on this market, but when I'm looking at this, I'm looking at the sectors and the percent of. I'm sorry?
There you go.
The percent making 10-day highs very low, versus the percentage of making 10-day lows here. To me, if anything, this is based on yesterday's closing prices, but holy mackerel, talk me out of looking at this and saying, man, this breath is absolutely horrible.
Well, it is, and it's not absolutely horrible because sometimes I get this thing all red. And when it's all red, and see, that's my point. Well, something we've dealt with, and y'all dealt with me for years, is that I believe the overstretched rubber band is true. I believe I believe in washouts. And rarely, yes, I've got caught a couple times where the washout kept going. But again, once you get to that level of elasticity where you're truly in a waterfall, tell me when a waterfall has not retraced at least 50% of itself shortly after it happens. So there is an opportunity there, even if you're not exactly right. There's a certain point that once these markets get so oversold and these sectors get so oversold individually, that they are going to reverse. And that question is that the reversal or just a strong, decent bounce? Either way, there's money. And I think in an uptrend, that's what I was saying earlier, as we get to levels like these, we have to start looking at this could be oversold enough in an uptrend. If we were in a downtrend, yes, I'd expect it much more red. And I don't expect anything making 10-day highs, but what I'm watching for is as soon as some of those 10-day highs turn green again, that tells me we could have something that could last for a bit.
Okay, all right. Let's go to your final slide here, just for a pictorial illustration of what we're talking about here with all these divergences in the markets. Tommy, tell us what we're looking at here and what you're looking forward to.
Yeah. Well, what you all know, I'm a big RSI guy. I've been that for years. That's my one pretty much momentum-based indicator that I've worked with. And I work with a lot more as opposed to oversold and overbought as bull ranges and bear ranges. 30 and 70 mean nothing to me. 40 and 60 mean a lot. And if you can look right there, you can see the NASDAQ and the S&P are clearly trending between that 40 and 80 level, not between the 60 and 20. But it's not getting much over 60. So we're not getting a whole lot of excitement. But it doesn't mean it's overall bearish. This is the markets that wear people out. Now, the other side is the Russell, and it's basically has not made it back into a bull range since it broke below that 40 level. It keeps getting topped out around 50. And as long as that happens, it's going to be a weight on the breadth, and it's going to be a weight on a lot of the small cap issues. I will have to say, I expected it to have a little better rebound because I believe the banking crisis situation for the most part is over. Even with FRC here, I believe the liquidity crunch there is done because they are going to step in when something happens. And so I'm not really I haven't been expecting Russell to make new lows. Yesterday was an ugly, what we call a dumpling top in candlestick charts. And so basically it's all about follow through today and into the end of the week.
Okay. All right, Tommy. It's been great. We've had you on over the years. You've been very consistent with your analysis. How can people find out more about your products and how you follow the markets?
Well, you can certainly go to relativitycap.com. You don't have to spell out the whole capital, just CAP. And that's our advisory service. And that's really where I'm spending most of my time. From my data side, you can go to power-investing.com, and that's a website I set up with all my relative strength work and all of that. Having some charting issues, but I'll have to say I've been having so much fun with my boys and my family over the last year. I haven't been worried about fixing that. But all the data is really there and solid every single day, and it gives you rankings of where the markets are from my own proprietary relative strength calculations that I've been using since 2005.
Okay. All right. Tommy Lackey, Relativity Capital Advisors, joining us here on Pre-Market Prep. Tommy, we'll be dialing you up again real soon.
Thank you, guys. Always a pleasure. Have a great day and good luck.
All right, Dennis,
Thanks,
S&P's continuing to just drift higher here, just a little bit, back over mid-range on the session. So a lot of green. The tech is leading.
It's all tech.
Yep. Is leading the way here.
Tech is the reasons. You do have Boeing. We know Boeing's trading.
It faded now.
Higher here, so you do see a little bit of strength in Boeing and a few other stocks that have reported. But overall here, we can see the reason, and it's tech. Tech stands out, very green here on my screen. There's a few that are still trading down. Apple has went green. Netflix is still trading the red. But you're looking across, and a lot of value names. Consumer staples are weak. Banks are slightly down. They've started. Carry has actually went back to the green here, which is good news. You want to see that stay higher. It was up substantially last night on PAC-W, and then I think the FRC knocked down to 5 this morning, knocked it to red, but it's back green again here. Again, tail of two tapes. It's value versus growth. It seems like this market can't get both of them going on the same day in either direction. So, you look here and you think, okay, how are you going to approach today? I think I'm still in the whole fade trade camp on most things. I mean, I can't bring myself, I'm not fading Microsoft, but I can't bring myself to pay up 23 on it. I do think with Google, I think I would be fading the rally in Google here because I feel like the story in AI is just not hot with them. I feel like there's going to be talked about today and saying how Microsoft, Kramer's on TV right now talking about Microsoft. He's probably talking, he's predictable what he's going to say. He's probably talking, oh yeah, Microsoft, the AI leader, and Google can't get anything right. And they're not talking about it on the call. So, I mean, media can push that price around there too. So I'd be more inclined not to be buying the Google as opposed to
right.
Microsoft.
Dennis, you doing okay on your internet there? Because we lost your camera there for a second. You doing
I'm
okay
back.
on your
I'm trying.
internet? Yeah. Okay. No,
Did you have my voice?
Yeah, it wavered just a little bit. So
I don't know what happened there.
Yeah. I know how important the open is to you, so I just wanted to make sure you got everything checked out.
I'm going to have to find out what's going on. I don't have opening imbalances here today. I've never seen that in a long time. I don't know if there was a change here, but so typically opening imbalances, and we're talking about the order flow it's showing, for the opening print. On the NYSE stocks typically come out at 8 a.m. and the NASDAQ doesn't come out until 9:25. So right now I'm having no imbalances at all. So I'm not sure if they're having a problem with the feed or if they've changed it. They changed the stuff on this so much. I didn't notice that there was a proposed change. If anybody in the chat knows if there was a proposed change to the NYSE imbalance feed, please let me know. But right now I don't have any imbalances to talk about because they're all zeros.
Okay. All right. Let's see what we get some trade ideas from TradeZero. Okay, all right. Let's go to the leaderboard on the upside first, right? Because everyone wants to hear about upside markets, and we'll have Aaron change that for us real quickly, and we will go to the leaderboard on the upside. And what do you know? All right, I got to give Microsoft a stab here, right? You can't let the technicals go by. All right, pre-market high. Well, it's an after-hours high, 302 even. I would use that as a target. And then that's it. Above 302, I'd try and stay long. Nothing on the monthlies until 315.11. I don't know. I mean, I just see it's just my contrarian instinct to want to sell this stock. It's probably not the right call. But 302 pre-market high. We got good old MSTR
That's
moving
the
up.
Bitcoin rally.
Yep. There you go. Wow.
Which we called yesterday.
You called. I'll give you credit on that one. MSTR trading at the highs of the pre-market session. You're above 300. Next daily high in that one. Wow, that's 312.90 if you're looking for another target here in MSTR. Oh, MongoDB sneaks in number 3 here on the leaderboard. Don't know if this is earnings.
Yeah.
Okay. What you seen anything? I see a quad of highs here at the 235 area. So a little bit ways to go on this one.
Maybe I'm wrong on earnings on MongoDB. I was just going to look them up. I thought it was earnings. I thought I had even on my sheet. Maybe I'm wrong. No, maybe it's not earnings.
Okay, let me go to let me check it here. MongoDB. I mean, there is a tech rally. Boom. Nothing.
That's significant. That's got to be news though, because it's up too much. So I'm just trying to figure it out.
Okay.
Yeah. No. But Goldman had a bullish note yesterday. I'm not sure if that's the reason for it today.
Let's take a look at good old.
No, it wasn't earnings. I'm wrong.
No, just a tech rally. Good old NVIDIA trading up 612. Your super high charge beta NVIDIA, always one of the leaders on the upside or the downside. The S&P, that's trading up 612. I think for me, NVIDIA here, 280 to 262, 18-point move. No, 281. So it's called 19-point move. I don't know. This 270 area, can you get back above there? Yesterday's high, it was way up there at 272.47. So not quite getting back to yesterday's high. Let's do one more on the leaderboard here. Let's go to China stocks here. I see Baidu. You get Dennis. I know you missed your opportunity in Alibaba. Baidu trading up $3, a long-term downtrend here. You're
Tech
gonna read.
rally here helps that as well. We're obviously seeing overnight China rally up, but don't discount Microsoft's move on Baidu, Baba, and all the tech stocks over there. I don't know, Joel. I have too much geopolitical risk here to come in. Like Baidu, look at this chart on Baidu, like how straight down it is. I mean, it was 130 to 160, and they talked something about AI. I remember in that big pop up there, and it has just been a steady decline for the last month, straight down a perfect line. I mean,
No.
110 seems like major support here on Baidu. I feel like there should be a bounce trade here. The contrarian in me likes to, when you get to a major support level, try to take a shot. But then, geopolitical risk. I'm scared of
Oh
China.
man, this thing has been down. This had since March 30th for this entire month. I think it's had one update. One update when it went from or two. I'm seeing two updates. Two updates in the last month here. So let's see if you get a buy the dip opportunity. All right, let's flip to the losers here on TradeZero. And what is at top of the loser board? No shocker here. Well, it's not ENPH, but solar. Boy,
What
that
is
analyst from
ENPH?
yeah.
ENPH and SEDG. And
Look
we
at
know
that.
these two stocks pair trade very well together. If you want to do the pairs, first Solar does its own thing a lot of times, but ENPH and SEDG do trade very, very well together. We know ENPH was disappointing earnings. It is trying to make a new low on the move here right now. You never want to be buying stocks making new 52-week lows. And then SEDG is following suit and getting to the lower range as well. It's kind of more been range bound, but it's going to be hit here this morning. SEDG's got some support down there just under 280.
Okay, and the MPH, I just pulled up the pre-market chart, and they cleared out those 183 buyers with the vengeance here. We will keep an eye. The next monthly low in the MPH, that doesn't come in until 175. So I'll back off by 181.33. I'll say, hey, 175 is your next monthly support level. And I just want to give props that, to this that sneaky downgrade to sell Friday after hours in First Solar. And that guy's got it right. First Solar now down 7
Turned it.
on this. Yeah, he turned it.
Yeah,
I mean, we
turned
talk
it.
about analysts that give, good and bad. I see Run is getting run here too. That's
Yeah,
another.
Solar's having a real rough
Yeah.
day.
And anything else? I see the Cisco Kid on there too, a little bit farther down. That's down
So
48
quick
cents.
talk on CSCO. So what you see, and for whatever reason, is this is the ETF arbitrage playing out. And I've talked about this
Ooh.
before, and you're not going to read about this anywhere. You're not going to have any articles written on this, but I can tell you this happens. Is that there is, for whatever reason, when you get Microsoft reporting and you get Google reporting on the same day, if the QQQs aren't really rallying enough to make up for sometimes those, they actually start selling off other things, the non-tech components of the QQQ. Now, Cisco is tech, but for whatever reason, the algos that do it throw Cisco and Intel into the non-tech components. Maybe it's because there's so much value that they throw it in there, but you'll see certain stocks like KHC, you're going to see a lot of the consumer staples, the ones that are in the Qs. There's literally a list here, and I can just read them off to you, like Pepsi is in the QQQ. People don't know that, but Pepsi is in there. Pepsi's probably going to have a weak day today for the simple reason is that it's not a tech component, and QQQ is not really up enough to make up for all these other tech stocks being up so much. Yes, QQQ is having a fantastic day. It's up 1.1%, but Microsoft is a huge piece of that. And then you get the NVIDIAs and all the other tech stocks trading higher. The QQQ is actually not up enough to make up for those. So what they do is they turn and they sell the non-tech components of the QQQ. It's the ETF arbitrage at work. CMCSA is another one. It's probably going to be down today. And yes, it is as I bring them up. You've got
Which one was that
Costco,
stock you just mentioned?
Comcast. So here's
Okay.
like non-tech components of the QQQ: Pepsi, Costco, Cisco, Comcast. I mean, Cisco is not, but they throw it in here. I don't know why, and I have it on my list. I have a list right here that shows all the non-tech components of the QQQ because I know on this day there's a couple times every quarter they all seem to move together. Gilead, ATVI is getting hammered on its thing, but it's on the list there too. KHC, Monster Beverage. I mean, you've got AstraZeneca, A Zebra, and Dollar Tree, WBA, and I do have some trading positions in some of these stocks. But just letting you know that some of these stocks will likely be weak here today because the QQQ is not up enough for as much as tech is up.
That's great. That's great input here, Dennis. Let's just finish it up here with a stock from the chat, and they're asking about Snapchat. Now, what you got to be aware of at Snapchat is that it's going to move. It's going to move big time off
Thursday.
the
Meta.
earnings are coming in.
It's
But
going to move
right,
off Meta, and then it's going to get its own earnings. You know what I found interesting, and I wonder if other people remember Snap always reported first.
yeah,
They
I
got
was thinking.
Snap reporting after now. So because Snap used to move Google and it used to move Meta, now it's not going to have as much influence because it's not the first to report, at least not this quarter. It's going to report after all these. It's reporting after Meta. It's reporting after Google. So you can't, just look at it and say, oh yeah, Snapchat really moves Meta. It's not going to move it as much because we're already going to know the Meta results. So interesting that they moved it past and it's reporting after Meta now. I found that very interesting.
All right, and let's just finish it up. We really don't talk about ratings much, right, during these heavy earnings season here, and a lot going on. But Tesla, Jeffries, they downgraded to hold, lowers price target to 185, but it's trading green, so it doesn't look like Jeffries is swinging a big stick here so far in Tesla. To me, just clinging to the 160 area. Let's see. I mean, it's up on a downgrade so far. The high 163.47. If you're leaning on that, if you're looking for a long, you want to see that trade today. Dennis, any final market comments here?
Two stories you care about: Microsoft and FRC. Those are the two main stories here today. FRC, obviously, Microsoft, the driver of the bus here today. It's what's driving the S&P higher. It's what's driving the QQQ higher. It's what's driving the AI trade with obviously NVIDIA and AMD trading up on the AI trade as well. And then you have the opposite story here of First Republic. Does the bank stabilize today, or do we continue to leak? Do we get concerns of contagion effect? Does PAC-W hold up? So there's the regional bank story versus the tech story. Those are the two stories of the day.
Okay, that's it. This is wrapping things up halfway through the week. Hump day. Everyone be careful out there. I'm going to go over to premarketprep.com and I'm going to talk to Arthur Bass, and he's going to talk all about the Fed. We've neglected the Fed here during this earnings season. So go back over there. Folks, thanks for joining us. This is Dennis, Dick, and Joel Elconin signing out on this Wednesday. Everyone have a great day.